Welcome to a new episode of Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. This, of course, is the podcast that will make you a smarter investor. So hit us with those 5 stars on Apple Music, Spotify, and likes on YouTube. We really appreciate it. Very excited by this special episode we have here today. A big energy Cyber Monday roundtable here at the NASDAQ. Adrian Yee, analyst at Barclays. Good to see you in person for a change. Michelle Meyer, chief economist at MasterCard Economics Institute. Good to see you as always. And Simeon Siegel, another friend of the show, analyst at BML Capital Markets. Good to see you guys.
You too.
So what have you guys been out there shopping for on Cyber Monday? Any big deals?
Pretty much everything.
Yeah.
Everything's 50% off.
Is it good though? I mean, is that good for retailers?
I mean, it's not great for margins, but they're massively pulling up sales earlier into the season. It is always good to lock in sales early in the season. There's not a lot of inventory, right? So you want to make sure that those 5 fewer days this year that you're actually getting a share of that consumer's wallet.
We're going to get picks. I mean, you cover specialty apparel. You cover specialty apparel. I bought, before I get into the data, because you're the one here with the latest Cyber Monday data, I bought this shirt, Simeon, for 80% off Banana Republic. Are they making money on this stuff?
And it looks good.
I mean,
it looks good.
I mean, I look good, so it should look good.
Listen, you're wearing it well.
Yeah.
I think they're wearing it well. And to Adrian's point, a lot of the stuff is priced accordingly. I mean, a lot of the stuff they're trying to drive for a specific margin that they know they're going to get. And so, where'd you buy it?
Banana Republic, Gap owned. Like, I'm shocked. I mean, this thing fits. They've always had a problem with fit. Like, suddenly Gap's making things that I want.
Should I pull the string as to whether that was Banana Republic or Banana Republic Outlet?
It is Outlet.
Okay.
Like a full stop. Like, I'm an open book.
Well, no, I'm not saying that for them. I'm saying because the outlet is engineered for that price. And so when you think about certain product there, sticker shock and percentage off is made to make money.
Well, don't pull the string because it might fall apart. So let's get into some data. Michelle, you have the data. MasterCard spending pulse. Black Friday to me seemed good.
Yeah.
Especially online, maybe stores meant, but like, what did you see?
Yeah, I think you summarized it quite appropriately. Total retail spend up 3.4% from this Black Friday relative to last Black Friday, which is a perfectly respectable trend in terms of spending. And e-commerce was really where the force was. So we saw a 14.6% increase in online spending this Black Friday relative to last. But in-store was kind of flattish. And I think it's exactly what we spoke about at the top, which is it's a search for value, it's a search for promotions, it's a search for consumers who are looking to make their money work as best as possible and being really targeted and clear about how they want to engage this holiday season.
What categories surprised you?
So we saw some strength in apparel in a way that we hadn't been seeing. So the trend in apparel was a bit softer, and then this Black Friday hit, and consumers showed up and they bought at Banana Republic and Gap, and for all of those, those.
So I'm a leader. I'm leading the charge here.
You're in it.
Yeah, I appreciate you.
You're a total trendsetter.
Yeah, thank you.
And footwear also looked like it was doing a bit better. Jewelry, electronics. We saw consumers try to grab up a lot of those typical holiday items. And again, in a way that was more meaningful this year than we saw in the past few years.
Adrian, I think you've known me in some form like for 15 years, like when I was like an analyst way back. And for me, it was Black Friday that week and I was in the stores. Like I was trying to like count traffic and like hangers on the rack and see what was out of stock. But does it even matter anymore?
It does not matter.
It doesn't matter. I'm listening to what Michelle's talking about, and yeah, in-store might be weak, but as long as online's good, I mean, I guess retail's going to have a good season.
I totally agree with that. I think what's happening now is we have seen Black Friday turn into Black November, where they pulled up promos, to Black October, and we actually saw these retailers start to break price at the end of September to get in front of Amazon Prime Day. Because once those holiday wallet dollars are gone, they're gone, right? So everybody was trying to get in front of that. And I think that you're going to see the traffic portion of it just so spread out. But the online piece of it, it's Black Friday, Cyber Monday. Yeah. And those are going to be your two big days. And they want to make sure they lock them in early.
Were you out in
Brian,
stores?
You knew Adrian for 15 years. I worked
I can't
for Adrian.
believe that. I didn't get that memo. This wasn't planned.
And so I brought Liam, I brought my 12-year-old with me to the mall walk on Friday, and we walked through it, and he's like, it was this really fascinating experience. We're going through, and he's picking what he wants to be at. He probably knows a lot more about this than any of us do. And then as we're walking through, he's like, so why do you do this? I'm like, well, I used to go through with my recorder counting people.
Yes.
Because that's what Adrian and I would do early morning. And we would walk through and be like, okay, 7 people at the cash register and 12 people now. And then last year my notes said, and like, he's like, why do you do that? I was like, I don't really know.
Adrian, did you see this greatness in young Simeon back then?
Of course.
Really?
I absolutely did. Yeah. He's just natural, right? So there's certain people who just kind of get it.
Oh, God.
I know. I know.
Such a nice reunion.
This
here.
is like,
Who needs makeup? I blush
that's
naturally.
true. Simeon, so were you in the stores? Are you still doing those things? And then if you're not, I mean, how does an analyst determine who's winning in retail?
So I think it's a really good question. Honestly, I think I go, I'm sure you go, Michelle, I don't know your background, whether you go, but I go for nostalgia. Like it used to be this hustle and bustle, it used to be chaotic, and now I've been going to the same mall. Like one thing that Adrian showed me and imprinted me is you go to the same store, all the same time of the week, the same time of the day, and you just create this image of how many steps until you see the first inventory rack. Are they face out? So they're not like there's a lot of different pieces.
Well, that's a good one.
Sorry, I shouldn't give this is public. I shouldn't give your secrets away. But they were great. And so it was this idea of like this is what the image looks like. But I think we used to be able to do that and say, okay, now based on this, we think the comp is going to be, we think the sales are going to grow 4 to maybe 5%. Michelle can say, no, it grew 3.1. Right? Like our read 3 or 3.4. So our read, and that's the point, right? Like you have basis points, we have gut feel. So it gives us qualitative dynamics. It lets us see what product's out there. It lets us feel whether there's a lot of inventory. But the web scraping we're going to be able to do on the promotions, the dollars you're actually going to be able to generate, I can't compete with that by walking through the box.
Michelle, does this strength in consumer surprise you?
It doesn't. I mean, we've seen the consumer really engage throughout this business cycle. And I think that reflects a few factors. The labor market has been strong. We've seen continuous above trend job creation where the demand in labor has been very encouragingly met by supply of labor. So that's been certainly a positive. Wages are running above underlying price inflation. So there's a lot of disinflation or even for some categories deflation as we've been talking about. But wage inflation is still hovering close to 4.5% or so on a year-over-year basis. And for those that have been fortunate enough to invest in markets or homeowners, they've seen very, very positive wealth effects, which I do think is also a factor during this holiday season.
And so you think this is the holiday season where finally we see an impact of the wealth effect in retail?
I do think it's making a bigger difference. I do. And I think that you can see it in terms of savings rates coming down a bit. Consumer sentiment has improved. I think all of that is in part reflective. But of course, it's not equal. The wealth effect is highly divided, right? So you do have to be mindful about who in the economy is able to realize that positive wealth.
What's your read on the lower income shopper?
So the lower income shopper, I think, is still, again, it's active, looking for value, looking for deals, looking for a way that they're going to get the most out of their dollars. So I think it's definitely a mindful consumer, but it's a consumer that has still been engaged in spending. And consumers have a lot of choice right now. And that kind of speaks to your mall shopping. Like, yes, you can still go to the mall and look at what's in the stores, but you can pull up a lot of comps on your phone and you can decide, do you want to buy today? It's the Wednesday before Thanksgiving, or do you want to wait for Black Friday, or do you want to wait for Cyber Monday? Maybe you're going to get a better deal. You're going to monitor and you're going to be really thoughtful about when you engage.
Adrian, in terms of promotional levels, how do the promotions look like in retail this year versus last year? And who is starting to worry you a little bit that they're maybe too promotional and they might exit the holiday season with maybe too much inventory?
So let's remember last year people were promoting with purpose. They were trying to get rid of inventory. So it's a very, very different reason why they would be promoting this year. This year they entered with super clean inventory, but they're promoting to stimulate, to get her to open her or him to open his wallet.
Hey, I'm out there
right?
spending.
I know,
I got my eye on a new watch. I've been working my ass off all year. I want a new watch, and I'm going to go out and get it. Like,
so,
and you deserve it.
I do deserve it.
You do deserve it.
I do. Maybe I want two watches.
But you're going to wait for the best deal.
But I'll tell you, that's exactly the feeling. That's the feeling. The feeling at the lower end consumer that they have been under duress for 3 consecutive years. They're finally start to seeing disinflation in the essentials categories, and to that $1 extra they want to have fun with, right? If you're at the higher income levels, the 100,000 and above is what? Half the households, but 2/3 of the spend. So you're in the market. You're up 25% this year. You're feeling pretty good. The wife needs a present. Right.
Is there?
So
I went to the mall this weekend. And
Where'd you go?
Roosevelt Field. So I go in there and I see this beautiful Ralph Lauren, and I dig Ralph Lauren, beautiful hoodie, bottom to like almost $300. Like, is there deflation fatigue out there? I didn't buy it for a hoodie set. To me, it just seemed like too much. In fact, more broadly, the store just seems really expensive. The Bloomingdale's, Nordstrom, price, even the cosmetics section, prices that I haven't seen in some time.
And that's their story. They're telling you they've been raising price. I mean, so that has been the Ralph Lauren mantra. Is I've never heard someone say AUR more times, which stands for average unit retail, which is a fancy way of saying price. And so that is what they are trying to do. Now, that doesn't mean you can't go to TJ Maxx and find their product as well.
Which I do.
For having said that, and I
But,
think,
but even like Tom Ford cologne, $4 or $5 a bottle.
it doesn't mean you can't go to TJX and find that. No,
Really?
But I think that's part of it. I think this idea of we think about there's a massive divergence and there's opportunities and anytime there's no one sample set. And so what you're looking for your Ralph Lauren is going to be a different group of people that are finding their Ralph Lauren polo shirts that they can get a good deal on. And I think that's the beat. Listen, what Nike does better than anyone else is segment. And despite the fact that Nike is viewed as this massive black cloud over them right now and the world's imploding for them, they still sell $50 billion worth of product. If that's down 10%, that's still $45 billion worth of product. How do they do that? It's not through $45 billion worth of the latest LeBron $300 shoe. It's selling a certain amount of people, a certain type of people that really care about the latest drop at full price, and then selling a lot of back-to-school $50 sneakers. And so I think being able to segment is how you get large in scale, but what we forget, no matter where you are, is we're humans. We're naturally going to focus on what drives us. What sweater did you most recently buy?
This 80% off
We know.
factory sweater.
We know, and
I'm
it's
very proud of it.
beautiful, and it's beautiful.
Thank you. It's got
But
some
we
shine
have to
it.
remember there's other people that are going to buy across different pieces as well, and they're feeling the same way.
Yeah. All right, hang with us, guys. We're going to go off for a quick break. We'll be right back on Opening Bid. All right, welcome back to Opening Bid. We have our big energy Cyber Monday roundtable. I want to get into some picks. I mean, you're not picking retail stocks, Michelle.
I'm picking the economy.
You're picking the economy. All right, well, I want to get to picks, but I got to go to each one of you on tariffs because I think both of you may have unique perspectives because you cover the apparel names. But let me start with you, Michelle. What is the impact of tariffs on China, wherever they might be next year from an economic standpoint?
Yeah. So there's a lot of uncertainty about how this will play out, but presumably we can assume that tariffs will be on the rise to some degree. When you think about the economic impact, there's a few. One is around inflation, right? So the cost of intermediate goods will go up. We saw it with the prior rounds of tariffs. The question is how much that gets passed on to the consumer, how much that tariff is shared. That will be a function of how much consumers are willing to also accept that higher price point. So for the items that have tariffs, you could see consumers choose to shift away, buy other items, change their basket in a way that they're not as impacted by tariffs. So it'll be interesting to not only look at nominal spending coming out of an environment where tariffs are higher, but also real spending. Do you see a change in volumes because of that increase in price that could be put in place from tariffs? So really paying attention to the different items, not just overall spending, but how things are going to shift on the back of tariffs.
So let's say, for argument's sake, tariffs come in January 21st after the inauguration, 10%. I mean, what does the first half of economic growth in the United States look like next year?
10% across the board?
Yeah, tariffs, yeah.
So I think you probably see a little bit of a softening in the very beginning, but I don't think that is tremendous. I don't think that's a huge shock. I think the numbers that are being talked about, 60% or 100% on China and 10 to 20% across the board, all at once, is a very, very different story. So it really depends on whether tariffs are eased in, if they're across certain items, certain countries, really selective, where you can see this navigation in the economy amongst consumers, or if it's at once very high across the board.
So, I mean, I caught up with Fran Horowitz, CEO of Abercrombie & Fitch, and we were talking a little bit about the impact of tariffs. Now, they've diversified out a lot of their supply chain out of China, but 7-8% of their supply chain is still tied to China. I mean, how detrimental could tariffs be on apparel players like an Abercrombie & Fitch?
So 7-8% is a good number, I think, all things considered. I think if you're thinking about scary numbers, that's not scary. I mean, this Opening Bid Cyber Monday brought to you by Banana Republic Factory 80% off sweater. If they raise a price on that, are you buying it? Are you going to take that price?
Well, I mean, if it's only 70% off, but if this shirt doubles,
will you
I mean,
buy
no,
it?
I'm not.
Right, and I think that's the point. I think there's an element here where I'm not going to pretend to be anywhere near as smart as an economist. So I think take that as the caveat and dismiss everything I'm about to say. But I think some of this is academic. I think some of this, first of all, is unknown. But I think a lot of it is classroom speak. Because I think for milk, for essentials, I think all of that obviously flows. You're going to have to pay what is being offered to you. But I think the question is, if prices are raised because of tariffs, or if prices are raised because the company thinks they can just charge more, it's not how life works. The consumer dictates. We want to believe the company dictates price, and in a shock factor in COVID when there's absolutely no supply, the company can dictate price. Other than that, we haven't seen that since 2006. And so I think the notion of, yeah, you love, every time we say this sweater, we talk about the fact that it's 80% off. It would be a beautiful sweater even without 80% off, but we keep saying that. Why? Because price matters. And so I think there's going to be an element here where I think we're going to have to figure out, the consumer is going to tell us if they're willing to absorb this price. If they're not, it either means you're going to sell less, you're going to have lower margins, or you're going to cut corners and figure out a way as a company, figure out a way to make your money by perhaps taking quality out.
Adrian, within your coverage universe, who's really prepared to handle tariffs?
I would say most of them have already, I mean, this conversation has been going on for the greater part of, since the half year, right? So it's not like it's a surprise, and it was also here in 18 and 19. So to the extent that we're down to kind of single digit numbers, I would say that the ones who are primely positioned for this is off-price. Your TJX, your Ross, and your Burlington, they are what we call taking second price. So the people who manufacture are taking first cost risk, right? Nike, 18% of their product is manufactured in China, right? Not the single digit numbers that we were talking about. And then the apparel guys. But most of that apparel like overnight, right, through these contract manufacturers, you can just swing it over to Vietnam or anywhere but China. That does not worry me. The apparel guys don't worry me. It's the footwear guys, or some of the people who have high-end product.
Does it even go down to like a Foot Locker? I mean, does it trickle down?
So what's interesting is Foot Locker and Dick's Sporting Goods are what we call multi-brand retailers. So they will 100% get passed through the price, 100% get passed through the price. But what they have at their discretion is they have a Hoka or an On, right, who have brand strength, full price brand strength. And at the end of the day, this is all about marginal revenue, the incremental dollar being more than the incremental cost, right? So if I can exchange a, let's just say, Nike on sale for a $160 full price Hoka shoe, I've made a bunch of marginal revenue dollars, right, that will cover the cost. So I think it's very specific. And then, the one thing that I'll say here, and I'm not an economist as well, this is just straight up kind of, Trump ran on a platform of making the household income stretch farther. So if the only thing that we're doing is making things cost more, there's got to be another side of this, right, that stimulates demand, whether it's Fed cuts, whether it's oil. I just went and filled up my gas tank for $2.99.
It's pretty good.
I mean, I was shocked.
That is good. Where did you go?
In New York?
In Mamaroneck.
All right, you got to send me the pic.
New Jersey, for you folks listening out, I don't know, around the world. Yeah.
But I mean, think about the 50K consumer, the under 70K consumer. That's the single biggest thing that drives kind of their wallet opening, oil, right? So, at the end of the day, it's not a great thing for costs to go up, but you have to think that somewhere in this solution that there is an offset to just making everything more expensive in the U.S.
Well, one of those offsets next year could be tax cuts. How do you think, what would an impact, what if we get those tax cuts at the same time we have tariffs? What does that do to the shopper?
Well, the fiscal policy, the continuation of the tax cuts is really a story for the end of next year. That's when the resolution needs to be extended. So, but people are aware of what's coming, right? So if the view is that there's going to be fiscal support, there's going to be lower taxes, there's going to be maybe tax credits given or additional stimulus pumped in, consumers could be aware of that, businesses could be aware of that, they're forward looking. So I do think that I certainly agree, you can't just look at this as one isolated event that prices are going to go up because tariffs go up and therefore XYZ, right? You have to think about all the different variables and the fact that it's not going to be uniform, even within one policy, the tariff policy. It's not going to be uniform across countries, and it's not going to be uniform across categories. So that allows for potentially a lot more wiggle room on the part of companies and the part of consumers.
In the time that you have left, about 4.5 minutes, I want to do some big calls. And I was looking for overlap between your two coverage areas. Nike, does it have a rebound in 2025? Simeon, I'll start with you.
It does.
How so?
New CEO,
he unlocks something
throw Adrian's
magical?
way first, but I think the idea here that we have to keep in mind is none of us know Elliott Hill. Like, that's this amazing part.
New CEO of Nike.
Sorry, no,
Yep.
yeah, and that's I think the point. No one on Wall Street or Main Street knows who Elliott Hill is, but everyone on campus does, and everyone on campus loves him. And so there's something there that we don't yet know that once the world comes to learn will be very important. That was true of Mark Parker. If you think about the different iterations of CEO, the Nike that we know was created by someone that most people on Main Street do not know. He's not a celebrity CEO. This is a business that relies on, again, sell $50 billion. You have to be very attuned to letting all of your employees listen to all of your customers. That's not a one-person job, that's a team job. I think Nike is Nike. I think right now they need to do their reset, which they are going through. It's not going to be a very quick, seamless fix, but this is a business that has the largest marketing budget in the world, right? When Nike wants to win, when they're ready to win, when they have the product to win, the storytelling will follow, and so will the numbers.
Adrian, do you agree with your former protege?
So I will
Do you
basically.
lose status as protege? Is that former?
No. Well, you guys don't work in the same company anymore.
So I agree that Nike is, we've seen the worst, right? The bottom is in. What I'll say is, he came in, it takes time, right? We're watching Starbucks, we're watching Disney. These turnarounds of big Titanic ships takes
That's
time.
what they are. These are giant
Yeah,
companies.
I mean, it's like you have to steer the ship and it takes a while. You hope you don't hit the iceberg, right?
Yes.
That's the goal. But so I totally agree that he's the right guy, and he's a Nike internal through and through. But I'll say I think there's a stock-wise, there are better assets to play, and you can play that through Foot Locker, which we like, or DKS, Dick's Sporting Goods, which we like, which are derivative plays on Nike without having to be in the Nike. Right
and Gap. I've gotten to know Richard Dixon. I remember him, new CEO of Gap. I remember him when he was, originally met him when he was at Mattel. So I've been surprised, or maybe not so surprised, how fast he's coming here and I guess just re-architected the playbook, got a lot of fundamentals correct. Are you bullish on Gap next year? Can this turnaround, is it a turnaround? Can this continue?
It is a turnaround. They just put up a 8-9% operating margin quarter. Year to date, they're well over on their way to that kind of 10% number. That's a very anemic margin number, right? Especially for Gap with those 4 critical brands. I think I used to work there very, very, very early on, even before I knew you, and he's the first brand, product, marketing CEO since Mickey Drexler. We just went through kind of the litany of
We just
operators.
had Mickey on opening bid. I mean, guy's great. What an OG.
Yeah.
That guy's awesome.
Right? Yeah. So, I mean, that's the last time you had a merchant brand-led organization. We are very bullish on Gap for next year and for a couple years hence.
All right, I got to get over to Michelle. About a minute and a half left. Your big economic call for next year.
I'm not sure how big it is, but I do think that the business cycle has room to run, and I've felt that way for a long time. People have consistently looking for the end of the cycle, the recession that has to come, this looming recession, and we haven't been a supporter of that view, and we're still not a supporter of that view. I think that there's an expansion that has legs, and part of that is because the nature of the shock that got us into this. It was a supply side shock, and there's been a supply side response. It has not really been as much of a story of the demand side, right? So the fact that supply chains have been fixed, you've talked about normalized inventories, the labor force has more than recovered. We've seen productivity gains. We've seen a lot of investment. We've seen a lot of small business expansion and new growth. And throughout that all, a labor market that has continued to grow and consumers that have been able to continue to spend. And now we're in an environment where inflationary pressures are much lower. Inflation's basically at target. The Federal Reserve has started their easing cycle. Fiscal policy is a bit of a wild card. We'll see how that plays out, as we just talked about. But the fundamentals of the economy, I think, are for further expansion above trend growth next year.
All right, well, great insights. 2 notes for me. One, thanks for waking up early and doing this. I've known you guys for years, and I appreciate you guys always being there for me. I greatly appreciate it. And then secondarily, thanks for the compliments on my sweater. Hell yeah, this is great.
Get it in other colors.
Yeah, I did. I got 8 other colors. It's just I'm all in. I'm all in the factory. Good to see you guys. Adrian Yee, Simeon Siegel, and Michelle Meyer. Happy holidays, and we're going to do this 1 year from now. Knock on wood. Do it.
Sounds good.
Appreciate it. All right, that's it for the latest episode of Opening Bid. Like us wherever we are going to be. We appreciate that love. We'll talk to you soon.